Hi everyone, welcome back to my YouTube channel, my new issue ACCA classes. So in this video, I will be discussing the topic capital gain tax. So if you are watching my channel for the first time, don't forget to subscribe my channel and share it among your friends. So basically, capital gain tax. When does capital gain tax arises? It arises uh, on the chargeable disposal of chargeable asset by the chargeable person, right? So what is a chargeable disposal? Let's discuss these three terms one by one. So first, what is a chargeable disposal? Chargeable disposal means it should be either sale of the asset or loss and or destruction of the asset or gift of the asset. If you find these three kind of situation in the question, then your mind should be give a hint that their capital gain tax will arise. So basically, these are the chargeable. So what are the exempt? So basically, if the gift is at the time of the date or gift is to the charity or asset you have selling to for trading purpose, in that case it is exempt from the CGT. So be careful. If it is the sale of the asset, you should also look whether if there is trading activity or not. In that case, there will be no chargeable asset, rather there will be trading profit. And if there is a gift of asset, you should also think about whether it is at the time of the death or the not, or gift to charity or the not. Otherwise, if in these three are the case, in that case it will be the exempt rather than the chargeable. So now moving ahead, let's move to the chargeable asset. So what are the chargeable assets? So I have made a shortcut so-called GFUQU. GF means G stand for goodwill, F stand for freehold land and building, U stand for unquoted share, Q stand for quoted share, L stand for long-term lease, and short-term lease and unit trust. So these are the chargeable assets. If you find disposal of this thing in the question, it means capital gain tax will arise. The things will be like that they are either gifting the building or selling the land and building, or there will be destruction of the land and building. Same case for the other as well. Okay, so now there is exempt asset as well. So for this, I had just noted down serially alphabetically. I had noted down these terms. So basically, there is no any asset exempt asset that start from the A. So it is basically it start from the C. Sorry, it's my fault. C. Okay, so basically, from C, company loan note, chattel and cash, D for debtor, decoration award for bravery, damage by personal injury, endowment policy proceed, foreign currency for private use, gift, G stand for gift aid securities, I stand for ISA, M stand for motor vehicle, N stand for National Saving Certificate, P stand for price, Q stand for QCV, S stand for share in the VCT, and W stand for work of art given for the national use. So these are the exempt, and I had listed it by serially through alphabetical order. So it will be easy for you guys to memorize. So these are the exempt. So now the what are the chargeable person? Who are the chargeable person? I mean, so UK resident. If those individual or the company is UK resident, in that case they have to pay tax on the worldwide income and the gains. And for the non-UK resident case, they have only have to pay tax on the UK income, right? For capital gain tax purpose, there is special rule. So stay tuned with me. We will reach up to that point. We will discuss about what are the special rules for non-resident, right? So till date, understand till this only, that if it individual is UK resident, they have to pay tax or in capital gain tax on the worldwide income and gain. If non-resident, in that case, they have to pay a tax on the UK income only. But for non-resident, they for CGT purpose, there is special rule. Okay, so now format. No, 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 one more thing. So before, as I said, chargeable disposal of chargeable asset by chargeable person. So now the disposal. So the date of disposal is very important, right? So here, if in normal case, the date of disposal is when there is agreement or contract. Sorry, in question you will find that a person agree to dispose this asset at that date, and after 2 months there is a actual disposal occurred. But we shall ignore the actual disposal date. The date agreement has or contract has been made, that is the date of the disposal. Okay, so but if there is condition contract, in that case when the condition is satisfied, in that case it will be considered to be as the date of disposal. Okay, so if there is if the transfer is at the time of the date, in that case it is exempt. Okay, so these are the points you have to remember or look in the question whether there is contract or not. Okay, so now format. The format is quite simple. We used to put the disposal proceeds, right? And after that, we deduct the cost which we had incurred while purchasing the asset. Then we will arrive at the chargeable gain. And if there is if you have disposed multiple assets during the tax year, you might have faced gain in the all, or you might have faced loss in some asset, right? So in that case, we will add or club all together, and if there is any current year loss, means and if you have suffered a capital loss in any disposal, then we have to deduct it from the first current year gain. Then if there is no gain, then only can we carry forward. So here we will deduct the current year loss, then we will arrive at the chargeable gain. Okay, okay, and then we have a annual exemption amount of 6,000, as we all know, and this is for the Finance Act 2023. And if there is any brought forward losses, as I said, if any loss cannot be offset, it can be carried forward. So in the similarly in the previous year, if there is any loss that should be offsetted after the current year loss and after the annual exemption. Okay, so be sure this is the mistake point where the student did the mistake. So remember about this. We will deduct first current year loss, then annual exemption amount, then only we will move ahead. Sorry, current year loss and annual exemption amount and brought forward loss. Then okay, see also in the minus. Okay, fine. Okay, so this is all about the format. So there are few more points that you have to remember. Okay, so regarding disposal proceed, okay, regarding this disposal proceed, there are few things that you have to remember. If there is sale of the asset, the first of all, disposal proceed, you have to also deduct there's some cost incurred to make the sale, like there might be legal cost or there might be some other cost incurred to make the sale, that should be deducted from the sale, right, in order to arrive at the net profit. And here we will put at the net profit, not the disposal. Okay, so if there is any cost like incurred to make the sale happen, in that case that should be deducted from the um, your disposal proceed amount. So I will just make it format. Okay, so now one more thing you have to remember is, if you are selling the asset and if that sale is at the arm length means if you have disposed the same asset to the unrelated party, independent party, if the same price you are charging for the connected party, in that case it is called as arm length. In that case disposal proceed is in that case disposal proceed is the actual cost, actual amount you receive from this person. Okay, but if not at the arm length, suppose I sold my card for the 5,000 for my brother and the market value is 10,000, so this is not the like arm length. In that case disposal proceeds should be the market value. Okay, in that case disposal proceeds is market value. And if the transaction is between the spouse, okay, if transaction is between the spouse, in that case the disposal proceed will be the cost that has a first spouse has incurred. Suppose my husband bought a car for 5,000 and he gifted me those car or charge any price whatever, but the disposal proceed will be the actual cost incurred by my husband. Okay, so this is the cost to the first spouse or gifting spouse. In the time of the death, as I said, there will be no IC, but if anybody is inheriting those assets from the other, in that case, disposal proceed will be the market value at the time of the death, and that's also called as a probate value. Okay, so be remember the market value at the time of the death is known as the probate value. Okay, and similarly for the cost, it's the same thing. Like if any cost has incurred while purchasing those assets, that should also be deducted from the cost amount to arrive at the net here, and we will deduct it from the net profit, I mean to say. Okay, so this is for the format and what to be deducted and what we should take in disposal proceed. So now let's talk about one by one about the chargeable disposal. As I said, chargeable disposal means sale of assets, loss and destruction of the asset, and gift of the asset, right? So now let's first talk about the sale of the asset. Okay, sale of asset could be either in the part or in the full. Part in the sense, if it is a land, in that case it might sold in the part. Okay, if it is a machinery which can be break down, in that case also it can be sold in the part, or you can sell in the full, right? So if it is a part disposal, in suppose land and building, I am taking example of land and building. In case of part disposal, whatever the disposal proceed you have received, just put that amount, and in that case part disposal cost will deduct and then will arrive at the gain. But the problem is in the case of the part disposal to calculate the cost of this part, because you have purchased the land and building in the full wholly, right? And it is very hard to allocate the part of those allocate those costs to the part of those assets disposed, right? And you might be knowing this thing that after disposing the part of the land, its value is different as when we sold the whole land, right? So there is difference in the price of selling the part of the land or selling the whole land, right? So in that case it's quite difficult, challenging. In that case what we do, we will calculate the part cost by using this formula, and formula means A stand for part disposal proceed, and B stand for the remaining market value of the remaining part. Suppose I sold 1 by 4th part of my land for the 20,000, and after selling the land, those part, the remaining part become for the 50,000, right? So in that case, A will be what I said, it's 20,000, right? And B will be 50,000. Okay, so and we will multiply it by the total cost which we had incurred while purchasing the whole land. Okay, so this will be the our part disposal cost, and we will keep it here and calculate the gain. So but after disposing of the part, in that case we have to revise our base cost of the remaining. And how do we do that? First of all, we will take the total cost and deduct the our past disposal cost which we calculated here, right? And after this we will arrive at the base cost. Okay, so this will be the base cost if we will sold those remaining part of the asset. In that case we will use this base cost. Okay, so but one more thing, the whatever again you are arising here in the part disposal, this can be deferred. Deferred means you don't have to pay tax right now, you can defer till the future date. And how can we do that? So first of all, there are this relief is known as a small part disposal relief, and there are certain conditions that need to be met up. And what are those conditions? The condition is that the assets should be land and building. If the asset is land and building, and other condition that the part proceed, whatever the amount we have received, it should be less than 20,000. It means this figure should be less than 20,000. And other condition is the part disposal should be less than 20% of total market value, and here total market value means A plus B. Okay, and fourth condition is disposal of all land and buildings should be less than 20,000. Okay, So if all this condition is met, in that case you are eligible for the small part disposal relief, and that means in that case you can defer the gain till when the remaining part is sold out. Okay, and in that case we don't have to calculate gain and loss. What we simply do, whatever the profit we have received for the part disposal, we will deduct it against the total cost and revise. We will simply revise the base cost. Okay, so we will simply revise the base cost of the, no, 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 base cost. Okay, so this is the revised base cost of the land and building. Okay, okay, got my point. So okay, so now before taking this risk you have to think some point. So what are that? From planning perspective and saving perspective, your mind should work like this, like why should I take this risk? Okay, so like if you don't have an annual exemption amount of 6,000, you have already consumed that, or you are basic rate, you are not basic rate taxpayer. Suppose whatever the gain earlier arise has consumed your basic rate band. If you know that in the future the Finance Act will reduce the capital gain tax amount, or there are certain laws will be available in the future to offset this gain arising due to the part disposal. So if these are the few like situation in your condition, there is the few things are available in your situation, in that case you will decide to take this small part disposal relief. Or if you are currently basically taxed unused, if you will defer this gain arising from that part disposal, in that case your annualization amount is wasted. In that case you will think you should not take this relief because your annualization amount is being wasted. uh, and other, you are currently basic rate taxpayer, in the future you will be higher rate taxpayer, so you have to pay more tax. So in that case you should not take this leave because it will cost more, right? So from planning perspective I have noted down some point. Okay, I forget to note down, I think. Okay, wait, I will note down. And you should think about those points before taking this relief. Let me note down those points, and so that you will have an idea. Or but you should remember that point before any, if this point will applicable for the any relief you are taking. Okay, so not for the small part disposal. So if you are taking any gift relief, holdover relief, any relief, so you should think about this point, planning from planning perspective, whether I should take this relief or not. Okay, so what are those points? Let's note it down. So first is you should think about wastage of AE. If in current year your annual redemption is being wasted or not. Okay, after taking this leave, your annual redemption amount will be wasted or not. You should think about this point. About the tax rate. If you are currently basic rate taxpayer, in that case you should take this leave. If not, in that case you should defer. Otherwise, Finance Act. In future, if the Finance Act will change or tax rate will be changed, in that case it's better to take the relief now, right? And availability of capital loss. Okay, you should also think about this, whether there is any capital loss available now or in the future. Okay. Mm, or okay, fine, these are the points, but you should remember while taking the relief. Okay. So in next video we will discuss about the our other point of chargeable disposal, so called loss and destruction of asset. So stay tuned and let me know how you like this video, okay? And in case of any query, do let me know. I will try my best to solve it out.